So let us check the answers. And before that, is there any catch here in this examination question? Scenario 4. Okay, let us see. GT has provided the following 4 scenarios. Okay, one more scenario they might have added in the exam. And then I will tell you one more thing, which I always used to tell. Respond to the queries. Means you may have to write the theory, support with the relevant extracts of the applicable indices. Okay, so what you need to do? You need to provide certain extracts. Let us see what they have provided. GT enters into a contract to exchange for 1,90,000. See, understand the numbers, sir. It was exactly 1 lakh there in the study material, 50,000 was the breakup. Here 1,90,000 satisfies the performance over at a different points in time. Regularly sells G and therefore SSP is directly observable. SSP of the M and are not observable. So company has to estimate them and they have followed the adjusted market method. Company maxes story of some other question, that story they have put it here. So they estimated this. You remember, no? Previous question. Now determine the transaction price allocated to each of the product. Now are they talking anything about the discounting here? No. Simply we need to allocate. Nice, easy question. They regularly sell product GT, M individually. Standalone selling prices are given. In addition, they sell M and together for 1 lakh. See, this is 90. Previously it was 50, together 50. So now you need to allocate, and you know, first you need to allocate the discount. Enters into contract for exchange 1,90,000 for all the 3 products, different point in time, or product T and at the same point of time, allocate this. Scenario of the customer described scenario, promises to product of hope, which is alpha, different customers to this range, and the same scenario, instead of 2,40,000, discuss how the transaction. Actually, which scenario was added? No scenario was added. The first is not a scenario, first is of previous question. They clubbed 2 questions together in this examination. Yes, so let us see. You must have started allocating discount, you may write the theory, and they considered no observable evidence. So you would have allocated 85,500, 41,800, 62,700 for 3 products. Did you get this? And this is that extract they are talking about. So this working is done, and you have spoken something like distribution should happen on SSP basis. Yeah, these 2 things I am looking in your answer. Other things, okay. If you have written much theory, I don't know, that is fine. Then we move on to the second scenario. Now there is a specific discount. So definitely you have to speak more about it. So you are going to sell product together. So 10,000 should be allocated only to product. So 90,000 should be to G, 1 lakh to T and M if they are transferred together. This is written. If the contract requires to transfer at a different point of time, then there would have been, you should have given me the breakup of 60-40. Is this 60-40 available in your answer? Any different? See, understand. Okay, are we supposed to, are we required? Is the question asked? Yes, if I go back to the question, they said or, and they said 2 scenarios. Now, it is a confusing statement. So, what is your strategy? Do you remember this question study material? Dump there. What they have done? They have done that calculations. So, this is the strategy you need to follow. So, you are in confusion, just go to the study material, put that. So, in this study material, this was done. Okay, so step mark will be lost. So, third scenario, you have to apply residual approach, but that smaller bundle discount you need to address first. So, 190 you give them, 1 lakh, then 50 you give. Did you get this 50? And you said it is okay within the range, because your conclusion is also required, not just calculations here. And the last one is a scenario you apply residual, but you end up getting 35,000. But the range is starting from 40 to 65. So use another method. So did you get this number 35? And you said you should use another method. We discussed it, right? So if the mark is allocated 2 marks, okay, 1 mark for this, 1 mark, see, That's fine. I told you, no, 100% if you can get, fantastic. But at least 75% to 80% also if you can get in whatever you know very well. Enough. Like in every question, later part it will come to you. Otherwise, don't touch this question first. Simple. Yes, so we'll move on to the next question. A very nice, beautiful question, okay, which is sitting in your illustration. Entity sells gym membership for rupees 7,500 per year to 100 customers. Okay, right now I have sold 100 customers 7,500. If it was a full stop, you would have passed bank account debit to revenue. How much? 7,50,000 rupees. But something which happened that they gave an option of renewal with a discount in the second year and third year. That means somebody cannot get at 6,000 unless they have got it here. Understood, no? So, or I can also treat like it is a material right. They got one right. The right because since they have taken the first one, they got a right to get enrolled themselves at a lower price in the subsequent. So, I could have shifted this. Followed, no? Again, at that time, material right we will discuss, because some options are falling under material right. This is a material right problem. Now, they estimate attrition rate is 50% every year. That means if 100 have come today, you understand, your one contract is meant for 3 years actually. But 100 are come today, next year only 50 may enroll with you, not all. Because why? Attrition is 50%. And the third year, how much will again renew? 25. Because out of 50 also some people will leave. Determine the amount of revenue to be recognized in the first year and the amount of contract liability against the option given for renewing the membership. Because you gave one right, they can use. In fact, you must have loaded this amount here, no? If somebody will come here and say, give me only 1 year, you would have given somewhere at 6,500 or something. So you, that extra 2 years you must have loaded here and given a beautiful marketing offer. Take this, 2 more offers are free, like discounting. Now, how many performance obligations are there? Yes, students. Okay, it's the one performance obligation to provide the membership. Again, from another point of view, we can see that there is a right also, material right also. Okay. Now, okay, let us go with the study material solution. They are telling there is one performance obligation. It is distinct or series of distinct? It is a series of distinct. It is over a period of time. Membership is over a period of time. Okay, so it is because of this attrition, the consideration becomes variable. There are some considerations which I am going to get in the future year because of the membership in the first year. So I cannot, the second year revenue, I cannot treat independently because that is coming because of my first contract. So my one contract with one customer is nothing but for all the 3 years. Understood this? Okay, so determine the amount. So write the entity has single performance obligation with series of distinct GS, goods or service. Transaction price is how much? Rupees 7,500 in first year and rupees 6,000 in next 2 years, correct? This is the transaction price, no? Will he give 6,001? No. 5,999? I will not accept. You have to give me 6, finish. Is there a variable consideration? See, consideration need not become variable because the contract price is fixed there. I told you, no. I will give you one piece of watermelon and say pay me 10 rupees, which is a fixed consideration, if you like it. One condition makes this fixed consideration itself is variable. So the attrition rate brings variability to the consideration. The moment variability means I need to estimate now. Clear? Yes. So this is the theory you write so that you determine very clearly, specifically what it is. So now write calculation of price per member. That means you cannot look 7,500 independently. It is like you subscribe for 12 months. 13th month is free. Have you heard this type of offers? You take 12 months, 13th month is free for you. Now, that means 13th month I didn't earn any revenue. I delivered goods, but I didn't earn any revenue. Meaningless, no? The 13th month, my revenue is loaded on the first 12 months. So, cutoff will go for a toss here. So, here, you write here, 1, 2, 3. What is the fee? First year you collect 7,500, 6,000, 6,000, correct? If this was AFM, you would have done in one single calculation. Fees per unit is equal to this calculation divided by this into number of members. Final answer. But since it's an FR, we have to present it. We cannot do it in one equation though. That's why it is time consuming. So number of members, how much in the first year? 100 fixed. There is no change here. But the second year I anticipate 50, third year I anticipate 25. So total will be 7,50,000, 3 lakhs. You're clear, no students? 1,50,000. So 12 lakh is the total consideration I am going to receive to have this single contract with every single customer for a group of 100 customers over a 3-year period. How many number of members? 175. Therefore, price per year per member will be 6857. That means per annum I have to recognize 6857, 6857, 6857. Yes, attrition rate is 50%. Attrition means people who leave. That is attrition. You remember in India's 19 also we have come across there was 6% attrition rate. Attrition means people are going to leave. So I have to consider when they leave, from this I have to consider 50, and when I come here, from this I have to consider 50. Because considering here 50 means meaningless again. Attrition rate is considered considering currently how many people you have right now. Not 2 years back how many and from there. Because by that time is 0, no? Understood? Yes. So now how much is the write the heading revenue recognition? How much you should recognize this year? So total revenue to be recognized is rupees 6,85,700. How? 6875 into 100 people. Balance. How much is the balance? Rupees 7,50,000 minus 6,85,700, 64,300 to be contract liability. That means we received in advance that 2 years membership fees. So it will sit as a contract liability, extra amount, because 7,500 is not your revenue, no? Previously you would have done all those stuff. You said 7,500 is my revenue. Now standard is not going to permit it. Alternatively, we can say this contract liability is nothing but your material right, because later we are going to discuss when we speak about material right means I'll give you some rights based on this purchase, like discount coupons. Next time you come, I'll give you 50%, but simply you cannot get unless you have entered here. So the moment material right comes, no, you can alternate this answer telling that there are two performance obligations. One is your membership, another is your material right. So material right, they will get only next year, no. At that time, proportionate this you will take in the second year, in the third year. And the third year, since the material right is going to get expired, from fourth year there is nothing. That's why by the third year, whatever balance of contract liability is there, it will get fully transferred to the revenue. Yeah, this year he got one material right. Okay. Sorry. Tell me. Uh, Perform, because you come here full day, I'll perform. How much he will pay? How much he will pay? The customer will pay. Suppose you are the gym, I am your customer. How much I will pay second year? 6,000. I'll pay 6,000. How much revenue you will recognize? 6,857. That 857 is something right you have kept ready for me, because you cannot say no. Second year, no, Baba, that was last year. I don't. The moment I shut down my this thing, you have to pay 7,500. You will go to the. I will go to the court. That's what I told. No, you can look it from two angles. You can say it is received in advance versus it is the material right. If you say it is received in advance, you say there is only one performance obligation. If you tell it is material right, there are two performance obligations. That's what we are saying. No? Okay. Since you are much curious about the next year thing, next year what journal entry I am on? First year, what is my journal entry? Let us pass the journal entry. No? So what is my entry? Bank account debit, how much? 7,500. Well, let us keep it small. 2, revenue, how much? 857. Okay, 6,850 I will say, round off. 2, contract liability, how much? 2, 4. No, how come it? 7,500 minus 6,850. 650. 650, no. What we do? 64,000 something we have told, no? 650 is my contract liability. I have rounded it off here. Next year, this is done this year. Next year, he has renewed the membership. What accounting entry I'll pass? Bank account debit, how much? 6,000. But problem is, see, I may not get it fully here, okay, or probably I may have to do it in full value. I have to do it 7,50,000, because what happened next year, full 100 people don't come. This reserve is, this liability is created only for that limited set of people. Okay, so I can say 6,85,000 and 65,000 is my contract liability. Next year, how much cash I get? 3 lakhs I am going to get. Okay, so when I get to 3 lakhs, how much revenue I will recognize? 2 revenue, 6,850 into 50. 6,850 into 50. 3,42,500. Okay, but they paid me only 3 lakhs. So contract liability 42,500. So out of 62, 42,500 went. Third year they will pay me bank how much? 25 into 6,000. 1,50,000 they will pay. How much revenue I will recognize? 1,71,250. So what is the difference? 21,250, which I will reverse with the contract liability plus 42,500. No, did I miss anything here? 6,850 into 25, 1,71,250 minus 1,50,000, 21,250 plus 42,500, 63,750. Wait, something I am missing here. Sorry? Because of round off, huh? No, let me do it properly. No, you are getting properly 7 lakh 50. Let me do it properly. 6857 to revenue 6 lakh 85,700 to contract liability 64 300. Okay, second year bank account debit 3 lakhs, bank debit 1 lakh 50 to revenue 6857 into 2050 342 850 minus 3 lakhs. Okay, contract liability will be 42 850 42 850 and third year 6857 into 25 171 425 minus 1 lakh 50 contract liability 21 425 plus 42 850 275. Yeah, maybe that 6857, no, that we have rounded off that initial 50. Okay, otherwise it is a great surprise to me how that in accounting this type of miracle can happen. Point something, no? Yeah. Because of that, because every time we are taking 6857 here, not the exact one. Otherwise, 0.01 cannot go here and there, no, in accounts. How it is possible? It is undigestible, impossible in the world. Correct? Perfect with this journal entries. See, this is the beauty and power of this particular revenue recognition, that they will not permit you to hide that rights there. Otherwise, cutoff will go for a toss there. Now, one examination question. Oh, no. Before this, we have to move to the next one, because this is something called a revenue recognition over a period of time. So now, yeah, this is the next problem on the next aspect. And if you want, you can give the heading, okay, from then and there, under which aspect we are discussing. I'll also give that, because here I have mixed it. Headings I have not given, like all the practice questions, no, it's coming in a while sequence. Because here priority is on the theory. Along with the theory, related practicals I am solving. So exact 5-step breakup and all I have not given. So maybe somewhere you can make up that. Anyhow, while practicing, you understand that this question related to this step. Yes, so we will come to the last step of revenue recognition, which is revenue recognition itself. Now, entity shall recognize the revenue when you satisfy your performance obligation, which you decided what is that in your step number 2, and how much depending upon what was got allocated, what you determined in step number 3. Understood? Now, when you can recognize when you satisfy performance obligation. Now, how? By transferring the goods or service which the standard calls is an asset. Your inventory is your asset now. It will give you cash flow. Now, when that asset is transferred, the standard says when the customer obtains control. In lease also we discussed it. When obtained, if the control has not been transferred, it is the financing arrangement. If the control is transferred, then it may be a sale and lease back. If it is not at off market term, then the prepaid lease will come or the financing component is going to come. You remember this? Sale and lease back. So they sale and lease back, we discussed this aspect. As per 115, we have to evaluate the transfer of control. If control is not transferred only, it is financing arrangement, not sale and lease back. Now, what do you mean by transfer of control? The control of an asset is transferred, that is the ability to direct the use and obtain substantially all the economic benefits from the asset. In lease also we discussed, what do you mean by ROU? ROU means I can control the asset. What do you mean by control the asset? I can direct the use of the asset. Or I have got an ability to prevent others from using it. Like you have ordered one pizza. When did you get the control over the pizza? When it is there in your hand. Why? Because when it is in your hand, either you can use it or you can take a piece and put in somebody's mouth. You have got absolute control over it. Now, can they recognize the revenue the moment delivery guy goes? No, he has to wait for your confirmation that you have got a control. Otherwise, can you stop somebody else from using it? The delivery guy can take one piece and cut into again 4, no? You have seen one video, YouTube video, very beautifully cut. Nicely they will cut and one piece they will eat. That big pizza will become a small pizza there. Now, can you prevent it? Can you prevent this? Yeah, if you can prevent, not the entity can. Entity will put its own seal, all the stuff. But if you are in a position to prevent, that means that moment the delivery started, no, you become the owner of it. That person is going to recognize the revenue. That is the difference. So the only question is, when did you get the control? Now, indicators that the controls are transferred. There can be different indicators, like entity got a right of payment. Now, on the way, if the pizza fell down, now who is responsible? Can pizza company ask money from you? Have opted for cash on delivery. If on the way pizza fell down, now who is responsible? Pizza company is responsible. After it is delivered to you, it fell down from your hand. You become responsible. Will you say, I will not pay money? It fell down? No. That's why when the entity gets the right of payment, that decides the transfer of control. It can take different forms. I am just giving one example, students. In real life, it can take, that's what, such a beautiful standard. Everybody it is applicable, no? It can take different forms. So we may have to see, did the customer got the legal title to the assets? And sometimes the seller will retain the legal title as a protection for payment, but control gets transferred. Like for example, I want to sell my property. That property is so many, it is so many, tree is there, plant is there, everything is there. I have sold to one real estate dealer or real estate guy. Now what that person does, no, immediately he will pay me an advance. We have an advance contract and drafted. And he start doing the work there. Have you seen this? Suppose there is one plot of land. Some contractor wants to construct a house. That land belongs to me. Now he comes to me, he pays me some advance, say 25 lakhs or 30 lakhs. One draft in stamp paper, we draft the contract. Next day itself, we start working on that. Title didn't get transferred, no. Title get transferred when? On one fine day, they will call me to that Tahsildar office. In front of Tahsildar, that thumb impression, transfer, deed, sale. After that, it gets officially transferred to them. But how can he work on the day 2 only without that transfer? But still, control got transferred. Followed, no? So this can be a situation. Or customer got the physical possession of the except in case of repurchase and consignment agreement. It is not a consignment, it is not a repurchase. Or customer assume the risk and rewards. If anything happens, customer is the headache. If that is the understanding, and my risk got transferred, customer has accepted the accept. Once you accept, you cannot reject it. Once you accept, it becomes your baby. So these are all the indicators which says that the control has got transferred. And this particular control can get transferred in 2 forms, 2 ways. We call it control over a period of time or transfer of control at a point in time. Sometime I may get a control over the asset over a period, not immediately. Or sometime I may get instantly. Whatever it is, again, like pizza, over a period or at a time? At a time. But somebody is developing one pizza for you as per your customization. You told. I can say it's over a period of time. That's what we have to apply certain. It's not that something takes time means over a period of time. You have to apply certain rules there. Yes. See, first thing I should start with how many performance obligations are there in the goods supplied on installment. 1 performance obligation. Okay. So 1 performance obligation is there and you get the control as and when it is transferred. That's why there are 3 conditions and I say one of the condition is fulfilled. And the moment any one condition is fulfilled, I say that in that single performance obligation, part of the performance obligation I have fulfilled. Now I will become eligible to recognize the revenue and get the money from you. It goes like this. It can be delivery on installment or cleaning or monthly support, whatever it is. Yeah, we will understand that condition. I will explain you with example. And it should be, because with this, no, your entire revenue recognition concept should be very clear to you. Yeah, obviously, because if you are not given me the second installment of the goods, whatever payment I make, it becomes an advance payment to you, because your performance obligation is not fulfilled, which was supposed to be fulfilled over a period of time. Now, what is the control over a period of time? This is the condition we discussed initially, but I told don't give much importance there, you will get confused. Now we will understand very detailed manner, because there are questions on this. Just like performance obligation theoretical question, you have to tell whether it is over a period or at a point in time. Now, entity will transfer the control of the goods over a period if any one of the following conditions are met. It says that the customer simultaneously receives and consumes the benefit as and when entity performs. Like, for example, monthly GST return, housekeeping. The moment housekeeping is done, did you get the benefit? The moment GST return is filed, did you get the benefit? The moment material is supplied to you, one installment, did you get the benefit? Yes, that means it is over a period of time. And there is a test for this. The test goes like this, that if you have done half the work, say 1 month housekeeping done, is there, and you stop, you say that, sir, I will not continue with the contract. Is that another entity? You will definitely call another entity. Are they supposed to do substantially reperform the work entity has completed till date? If answer is yes, then this condition is not fulfilled. If answer is no, this condition is fulfilled. Like, for example, you do audit. You have done audit up to say October. It's called interim audit. Suddenly you get one clash with the client and you resign. Now, when you resign, what happens now? The client will appoint another auditor. Now, the new auditor can start the work from October onwards, or again he has to redo from 1st April. Question is clear? You have done audit up to 30th September. It's called interim audit. You resign and one more auditor comes now, totally new auditor. Will he start his work from 1st April or from 1st October? 1st of To start from 1st of October, will the resigned auditor will give his working papers? It is his property, no? So he has to redo the work, and again, even though he shares his working paper, it is a dangerous thing. You don't understand anything about the first half of the transaction, what type of audit was done. So you may have to redo again right from the beginning. That means my first condition is not fulfilled. That means whatever 6 months audit efforts put on the client did not get any benefit at all. Understood? GST return. You have filed 6 months GST return. You resign. Now on 1st October, the client appoints another GST auditor to file the GST return. Now the new GST auditor, who has to, not GST auditor, the auditor or practicing CA, it is an assurance, it is a, what is that called? It is other services. Okay, it's not an assurance service. Is he supposed to file the GST return from 1st April, or he will start from October onwards? That means whatever 6 months service given, as and when it is given, the client has got the benefit. Understood the difference? So this is called the customer simultaneously receives. So whenever you want to see, is it series of distinct, you have to check, is there any one of these conditions are fulfilled? Then only you can say over a period of time, because one of the condition to be series of distinct, no, it should be over a period of time. Don't just have an impression over a period means it will take time. No, it may take 5 years, but you start recognizing only at the end of 5th year. Or you may recognize revenue on a staggered basis. That depends upon any one of these 3 conditions getting fulfilled. I hope the first condition is very clear to you. Okay, now we will move on to the second condition. That is at a point in time. No, because definitely control will be transferred, no, but that will be transferred only at the end of the 5th year. Like, for example, I would have told you next as proceed further. Since you asked me now only I'll tell. There is one plot of land. There can be 2 scenarios. This plot of land may be belonging to you, you are a contractor, versus this plot of land belonging to me, who is your customer, client, me. Now, in this plot of land, you will build one house, which takes 1 year. And that land belongs to you. At the end of the year, a completely built house, you sell it to the customer. When you will recognize the revenue? Throughout the year or at the end of the year? At the end of the year. Why? Because till the house is complete, customer didn't get any benefit only, no? Whose land it is? It's your land, contractor's land. Tomorrow customer says, I will not go. I can sell this to somebody else. So the second condition fulfills. It didn't fulfill none of the condition. That means till the end of say second year, say let us assume this house takes 2 years to complete. Till it is 2 years complete, I can't recognize revenue and it is my work in progress. And only once the house is complete, a complete house I will give it to you, then I can recognize revenue, because this is at a point in time. Alternatively, it is your plot of land. I start constructing the house. It will take me 2 years. When the house is when the control is transferred to you, did you benefit as and when I perform? No. What benefit you got? When foundation is laid, what benefit you got? When the no. My point is, when the foundation was laid, did you get any benefit? Did you went and stayed there in the foundation? No. When the wall was built, did you get any benefit? When the roof was built, you will get the benefit only when the house is complete. But that means first condition is not fulfilled. Let us go to the second condition. Did as and when the asset is created, that means work in progress is created, did the customer get the control? Yes, because tomorrow you can say stop construction. I have nothing to do. I can charge whatever I have incurred. I can take that money and I can walk away. But you may stop me from completing that house and give this opportunity to somebody else. So, if the entity performance, like again I told you, land that belongs to the customer, then as and when every single activity you do, you create an asset which is called a work in progress. But that asset is controlled by the customer. Then it is, so if this condition didn't fulfill, no problem, because any one you need to check. You say this is fulfilled. Now we will come to the one beautiful, terrible condition. Entity's performance create an asset. Means something, either finished goods is created or work in progress is created with no alternative use to the entity. And entity has got an enforceable right, and I have highlighted in red. See, understand here. This is or, this is or. And the right to payment is obtained. I'll explain this example with an example. Understand it very clearly. Suppose I am the entity, okay? This time you treat me as a supplier. Every time why you want to take that position. I am a restaurant. Somebody calls me, okay? They say prepare dragon tiger soup. Chinese, I am a Chinese restaurant. Prepare dragon tiger soup. So I will prepare it. He says that for this order, for this soup, add pumpkin, ideal ice cream, wine, and say coconut oil. He gives some, will I say no? I say what, Baba, it is your taste. You want me to add kerosene also, I'll add kerosene. You tell me no. So that customer comes there, sits there, he told me do this. So I created, my performance created an asset. Soup is ready now. Now I'll go to the customer and say deliver it. He says I don't want. Now does it has got any alternative use to me? If it was your simple normal soup, it had an alternative. Okay, the coconut oil, ginger oil, everything you have mixed it up. Now I don't have any alternative use. Now can I get the money from them for whatever I have done? If yes, then from the time I started to prepare this soup, it becomes over a period of time. Otherwise, if it was a normal soup, which has an alternative use to me, then I cannot say over a period of time. Why? I can divert it to somebody else. But here problem is this is so customized that I cannot divert to anybody else. Followed, no? But then I will say everything, no, I cannot divert only. You see, no, you buy any mobile. You say, I don't want this mobile. You purchase this mobile, you say, I don't want mobile. Gone. Its market value fell down. You say, sir, I don't have any use of this. Now, that your seller who sold you just 1 hour back, he can take it and sell it to somebody else. But they will never take it, correct? The moment sold is gone, no. Have you observed this? Once sold, gone. Then that means I can always claim, no, I don't have any alternative use, so it's over a period of time, I don't have any alternative use. I prepared this house for you, I prepared this tubelite for you, I don't have any alternative use. There will be an alternative. There will be an alternative use, no. That's why standard puts one more condition. If you want to claim that you have created an asset and don't have any alternative use, again, you need to check certain conditions. Okay, asset is considered not to have alternative use if there are contractual restrictions which stops from directing asset for another use. Like, for example, Crime Master Gogo Limited is a machine manufacturer. RBI gives one order to print one currency printing machine. Followed? Now, when the currency printing machine is ready, perfect, ready, RBI says, I don't want that machine. Does that have any alternative use? No. Let them give, no, that machine to me. Or for me, forget me, there are a lot of people who want that machine. I can say, I don't have any alternative use. Why? Other than India, I cannot use. But in India, there are a lot of people who want that machine, which RBI has designed to print the currency machines. So I can say, no, now who restrict me from using it? Through how? Through contract or through law. That means something can have alternative use, but somebody can restrict me contractually from not using it. And they are ready to compensate me for whatever efforts I have put. Then from the time I started to design that machine till it is complete and ready for delivery, it is over a period of time, not at a point in time. So this is the third condition. Okay, there is no contractual. In this, for example, in the soup case only, I will go and give this to a customer. Customer say, I don't want. So I want to transfer it to somebody else. Will that customer say, don't do? Can you stop me contractually? No. He says, I don't want because my bus has come, I am going, I don't have time to drink. So he pays the money and goes. You can always say, no, I don't, this I have got, I don't have any alternative use. See, everything has got an alternative use. But there should be practical limitations from the entity being using without incurring significant loss. That means if you want to get rid of this, no, you have to incur significant loss. For example, this soup is prepared now. I want to get rid of this soup. If I want to get rid of this soup, I see that you have come for doing audit of this thing, and I see you as my article students there. I say, can you drink this soup? Will you drink? You know the background, no? Coconut oil is there, ice cream is there, everything is there. Will you drink it? Okay, chalo, I'll give you discount, 50% discount. Will you drink? Chalo, forget discount. I will offer you 5,000 rupees to drink this. Will you drink? One more zero. Kashtava sukava, no? One time, no? If see, the condition is only to drink, not to vomit, no? So let me drink by closing my nose and then vomit later, but take 50,000. Will you definitely will take this offer, right? That means if I have to really get rid of this asset, to tell that there is no alternative use, I have to incur significant economic loss. Simply, I cannot get rid of it, whatever I have created. Followed, no? If any of these conditions are fulfilled, I say this is created with no alternative use. Perfect, students? So entity shall have enforceable right to the payment. How much? It is cost plus profits, whatever. Then only. It's not the proportionate cost only he will reimburse you. Cost plus full price that customer should pay you. And you should not be in a position to, the only way to do this is to dispose this asset. Follow, no? Okay. that we are doing. Yeah, we are following percentage of completion method. No, why? Because any one of these condition will fulfill, and we call it over a period of time. Now we will go, if it is over a period of time, at a point in time there is no headache. You deliver, you recognize. But if it is the over a period of time, we have got two methods called input method, output method. That's why in all those questions they said cost to cost input method. Getting connection, no? That was your doubt. You should be reimbursing. That means my work started on 1st of January. This work went on 2020 started. In 2023, he said, I don't want this. But from time to time, I have been raising bill, no. Why? Because over a period of time. Why? Because he is getting control over it. At that end, if he says no, that means I will recover my cost and profits. And again, if he has paid me money and I have fulfilled my performance obligation, you remember first one, contract, some advance is received, there were two conditions, if the contract should be terminated or I have fulfilled performance and there have nothing to perform more, then I can recognize revenue. You see the interconnection. But students, I am reminding everyone again, please open up your mind and ask questions. Think. Just don't listen to what I say here. Just think, and have you understood this concept very well? Any questions coming in a random different way, will you be in a position to answer it? That's what you should develop. Okay, so we will proceed further, and before we proceed further, I would like to give one small information to you. In China, okay, see in our Konkani, there is one signature dish called dal toya. Dal toya means it's the dal. When a guest come, that means that day that toya should be there only in the rice, along with the rice. Like this in China, there is one signature dish called this, what is it called, dragon tiger soup. If special guest come, people will prepare that. You know what is dragon tiger? Dragon means snake. Tiger means cat. Cat and tiger, snake, they will mix and prepare one beautiful soup and they call it dragon tiger soup. Check in Google. You want 50,000? I will increase one more 5 lakh. So, see, the moment, again, the person who buys should be much knowledgeable. Otherwise, somebody will fool. Which you would have been got 5 lakh. If 5 lakh you would have agreed. Okay, once in life, once in life, we'll see. We'll taste. But somebody fooled you by 50,000 only. So that's why, students understand, in accounting goes with the concept 113. Fair value start with two knowledgeable parties. If one, that means both the parties have done their independent research. If somebody is lagging behind in the independent research, one beautiful topi the opposite guy is going to put on their head. That's why they start with the, and if you got fooled, it's whose headache? Whose fault? Your fault. Because accounting standard says, the one who got fooled, he cannot come back and demand something, because that he should have thought while signing the contract only. So contract is something very powerful thing which gives the right. And today the world is governed with the rights. Election happen, somebody gets a right to sit in the seat of that prime minister or whatever. That is why right is a very powerful thing. The right, in which way you get that right, that's what you need to figure it out. Right of employment, right of setting up an establishment. Anyhow, so to be over a period of time, one of the three conditions that you should simultaneously receive and consume, or performance creates an asset which customer controls, or there is no alternative use and entity gets the right to payment with their profit margin. Now, what is the transfer of control at a point in time? Very simple. If all the three conditions don't fulfill, then it is at a point in time, and revenue should be recognized at a point in time. Like we discussed, contractor will construct in his own house. Now, I don't have any problem in recognizing revenue, because revenue at that time only I will recognize. But over a period of time, how do I recognize revenue? When the performance obligation is fulfilled over a period of time, How do I recognize revenue? That's why standard says, in case the transfer at a point in time, you don't have any problem. But if it is over a period of time, then you have to measure the progress from time to time. And accordingly, percentage wise, you can start recognizing it. If you have agreed to deliver in installment, you measure how much you delivered, that much you recognize. If you have agreed to do 12 months GST return, how much you finished, you measure, that much you bill. So that's why there are two methods to measure the progress of performance obligation, which is performed over a period of time. It's called input method and output method. In output method, you see based on how much you delivered till date, which can be a milestones achieved, units delivered, survey, time spent, number of returns filed. Follow, no? That's called an output method. Alternatively, if you don't follow output method, you can look how much efforts you have put there. Like how much labor and machine hours you have spent, how much cost you incurred, how much time elapsed. It is your choice. There's no hard and fast rule that you have to choose this, but whatever you choose, you have to do it consistently. So till now, whatever problems we have solved, which method we have adopted? Input method. What was cost to cost input method? What is my total estimated cost versus how much cost I incurred? That's my percentage of completion. Multiply it with the revenue, that is your revenue for the year. And that you can do in two ways. YTD level you can do, or for the period you can do. If you do for the period, if any changes in the variable consideration happen, it requires one cumulative catch-up adjustment. If it is YTM method, then that cumulative catch-up will be sitting there. So preferably you have to give the workings. Perfect. Now, one more thing, one examination from nowhere it came, they have asked from the intermediate. So when you measure the progress, you can use the output method or an input method. They say, no. See, when you go for an output method, like you call one surveyor and ask him, sir, tell me how much work is finished. He will make an estimate and say, 25 work is finished. 25% work is finished. But it need not match with the cost what I have incurred, no. What I have incurred is 35% cost based on actual cost versus total estimated cost. But what that surveyor is telling, 25%. Now, what is the difference now? See, I cannot recognize revenue more than 25%. But if I recognize revenue 25%, but my actual cost is 35%, I say I have made a loss during the year. Understood the catch here? So what happens now? Because if you go for a survey method, your revenue may be less than the cost incurred. Why? Because the surveyor is telling only 25% is complete. That's why whatever actual cost you incurred versus estimated percentage of cost based on the survey will become your work in progress. And what is your cost of goods sold? It is estimated cost multiplied by the surveyor's percentage of completion. That is your COGS. And anything actual cost more than estimated COGS is going to become work in progress. Have you understood this logic? If I draw a P&L account, my revenue is based on 25% of the survey, but actual cost incurred is 35%. I will make a loss. That's why I have to, what is my COGS? It is also 25%, but your costs are more than your revenue. That becomes your inventory, work in progress. Follow, no? But this problem you will never ever face when you use input method, because revenue is always greater than the cost, obviously, because your cost to cost input method you are looking, no? That's why in the problem what we solve, no? This is what type of twist can come in the exam. Anyhow, I will give it as a part 2, okay? Not right now, we will not discuss that, but I will show you past examination question asked in the CA final, where this concept they asked from nowhere, not discussed, not there in the study material only. Means questions are not there. Theory there may be, it may be there somewhere. They may be expecting you, have you done this in the inter-level construction contract? So they expect you get that knowledge from the inter and apply that concept. Anyhow, now there is one practical expedient for output method. This practical expedient says, see, you estimate 25%, okay, and bill 20%, or say you estimate 35% because you are following input method, but the billing is happening based on output method. There is a headache, no? Lot of mismatch is there, no? That's why the practical experience say entity can opt for output method. It can, and when then if an entity opt for output method, it can recognize revenue based on the amount to which entity has got right to invoice. That means for a simplicity sake, see, every month you will raise one invoice. Is that invoice acceptable to the client? Say for example, is it acceptable? If the answer is yes, because the client also must have negotiated, no? Without you fulfilling performance obligation, will he perform to raise the invoice? The client will never permit you to raise the invoice without fulfilling, no? So if I go for teaching, I am not taught only, I am raising my invoice. That institution will slap me. But I have been teaching, but it is like not a regularly, something I teach. So at the end, they agreed with me, look, on an average, you bill me for 50 hours. And whatever differences are, because sometime I may end up spending 40 hours, sometime I may end up spending 60 hours. Keeping that track is very difficult because I am not a regular employee of that institution. Say for example, I am telling. In such case, no, we enter into one mutual understanding. An institute says me, look, do one thing. Every month you raise one bill of say 50 hours. Irrespective of you have spent 50 hours or not. Because sometime I may spend 60, sometime I may spend 40. All these differences at the last bill will adjust. If this understanding you develop with the client and you raise invoice based on that understanding, then there is one option given to you. That means irrespective of, instead of going on actual measuring the output, whatever invoice you raise, no, you claim revenue based on that. Nice, no? Easy, no? Life has become easy. Otherwise our life would have been very difficult because you pass one accounting entry for revenue, but you raise one different invoice for the customer there. Accounting entry is contract asset account debit to revenue. Why? Because you have got some measure here. Price, SSP, allocation, all those things are happening here. And what you ask customer to pay is a different amount only. Then who will keep a track of how much revenue recognized, how much contract asset is there, how much customer to be receivable? That's why you enter into an understanding that I will raise this much invoice, and whatever invoice you raise, no, you can treat it as a revenue. This is only if you have opted output method, and that too over a period of time performance obligation. So this has saved a lot of headache from accounting part. Understood? Need not be, yes, exactly, but need not be, it doesn't go that material wise, no? See, that's what I asked you. One, see, generally the client will not permit you to raise the invoice without performing. Say for example, in 1 month, you didn't go only. That month, will you raise the invoice? No. Why? Because even though you raise, client will ask you, Baba, this month you didn't come only, no? Can you defer this invoice to the next month? Then you say, okay, sir. See, why this arrangement was done? To adjust that small gap there. That 10 hours, 5 hours gap, no? To adjust that, we had this arrangement. And the day I spent 100 hours, definitely I will raise the invoice for 100 hours only. So that's why you have to understand this practical expedient is given means you cannot take as per your advantage. Auditor will apply their mind and say, no, this is not permitted. It is given for the sake of inconvenience what you are going to face when you come across this type of situations where that adjustment of the number of hours, number of things you need to do, only for that. Are you clear, Shruti? Yes. Now, yes, we will see some of the questions. Now, I hope you are very clear about the over a period at a point in time. So, you should be able to tell me now, let us see examination questions. How over a period and at a point in time. Now, purchase obligation, AFS Limited is a risk advisory firm, enters into a contract with the WBC to provide audit services. That issuing audit opinion to the company. Like AFS is one audit company, audit firm. The professional opinion related to the facts and circumstances that is specific to the company, like whatever work I am going to do and whatever opinion I am going to give, it is meant for this company only. Sometimes like some GST related advices, same advice I can use for 10 other clients. But your GST is so complicated. Whatever opinion I'm going to give, I cannot replicate to other clients because such type of circumstance is not there other places. Have you understood this? That's what they are telling. See, they will not explain you in detail like I am telling you with example. Examination questions comes like this and say, its circumstances are specific. You should imagine what it means. Now, if the company wants to terminate the contract for reasons other than the entity's failure, like entity has not performed, definitely somebody will cancel the contract. You called one rickshaw guy to go to railway station. Hardly 10 minutes is remaining. You told half an hour back to come. That rickshaw guy has not come only. What you will do? You will cancel the contract and get another rickshaw, no? And can he come and say, sir, you cancelled our contract? You say, get lost. Did you come at 6 o'clock? That's why, if the company wants to terminate the contract for reasons other than entity's failure, then the contract requires the company to compensate this audit firm its cost incurred plus 15% profit margin till date. And the 15% is the approximate margin generally I will make on the contract. Whether risk advisory's performance is over a period or at a point in time. Why? Okay, that's the condition you are going to apply. You cannot say it is a single performance obligation over a period of time. Why? And if you want to tell it is over a period of time, any one of the following three conditions has to be met. And the condition number one, did you get the simultaneously benefit? As and when you started to work on that GST related aspect, did the client got the benefit? You will get the benefit only when the opinion is given to you, no? Your work in progress, what type of benefit it is going to give to the client? Understood, no? Understand the difference here? Ask me. In the case of? No, I am talking about this audit opinion. There is an opinion required on GST or your systems or whatever it is. Now, as and when the auditor is working on that, did the client got any benefit? No, very clear. Why? Because you will get the benefit only when the audit report is given to you. So, first condition didn't fulfill, not met. Okay, asset is created, customer controls it. No, who controls the asset? Auditor, because working papers are my asset. So, this condition also didn't fulfill. Now, did you create an asset which has got no alternative use to you? That's what. No, again, wait. Then you say everything I don't have an alternative use, no. See, you may have that alternative use. What is that? GST. GST related advisors, don't you say it has no alternative use? Can't you find a client who is exactly similar to this client and deliver this audit opinion to them? You will say, no, then I don't have an alternative use only. For the sake of telling you, say, I don't have an alternative use, but can't you go and search one client and deliver work in progress to them? Then on what basis you say, I don't have an alternative use? One word you tell me. One. Do you have a practical restriction here? What is the practical challenge for you? That means if you want to get rid of this work in progress, do you need to spend substantial money? Why? What type of money you need to spend? See, you have learned something. Okay, in your work in progress, something related to this client you learned. You got the work in progress. Now you want to give this work in progress to some other clients who are similar to this. For sake of telling you, say that I don't have any alternative use of this work. And to give this to other client, do you need to spend substantial money? Where? Whom? No, I need not, because it's my asset. Work papers are my assets. To give to other clients, that is different story. That is why there are and condition here. Entity has got no alternative use and right to seek the payment. Yes, this condition is fulfilled. Because the question very clearly says that if the contract is terminated, I can go and ask the money back from the client for what with 15% margin. That means this condition is fulfilled. But can you see here and? If it's the and means it should not have any alternative use, no. How do you prove that it has no alternative use to the audit firm? Contractual confidentiality, Baba. He will bind me by the confidentiality. No, can I take his data and give to some other client there? He will sit on my head. If I have to do that, I have to take his permission. Will he give? No, he will give when pay one big amount of compensation to him. Now, if I pay such a big amount of compensation, which is substantially equal to the fees what I am receiving, why I should get into all these things, Baba? What is the fun in doing this? Or I have to get that IP rights to myself. Otherwise, one day the client will come and file a complaint against me that in my company he learned this process and using my data and he is using somewhere else or sharing with somebody else. Now, I can use that knowledge, but I cannot share the data. I cannot share the processes. If the process was patented there and somebody will do this, no, and they will come to know it has come through auditor, then one habba is there for the auditor. Institute will send one letter. Very first clause in the second schedule, very dangerous confidentiality, which they will never want to compromise. Followed, no? So we have to be extremely careful. That's why my third condition also fulfilled, because it has got no alternative use, because there is a contractual obligation not to transfer to anyone, and I have got a right to receive. That's why third condition is met and over a period of time. This is the way you have to present it to the examination. Understood? Yes, Dhanashree, no doubts? Clear? No, any doubts are there? Yeah, please spend time and see, very important, you have to interact at this time. Whatever doubts you get at that point of time only, I would have preferred you raise that, discuss with alternative, because your interactions, no, gives you better understanding. It creates a pathway so that your mind is here only. Otherwise, the moment you miss something, your mind will take you somewhere else. You physically sitting here. No, if the question is what type of performance, whether it is over a period of time, answer is yes. That by looking at the question only you know. But how to present it, how to communicate, this is the three conditions you need to tell. Now, Space Limited enters into an arrangement with the government agency for construction of one satellite, a very specialized equipment. Although the Space is in the business of building such satellite for various customers across the world, specifications may vary depending upon the technology. In the event of termination, company has got a right to enforce the payment for the work completed to date. Evaluate with if the contract will qualify for over a period of time. What condition? Again, same third condition. Because first condition, you didn't get any benefit as and when the platform for the satellite is built. You will get benefit only when the satellite is launched. Did you control the asset? Question is very silent, whether the satellite is located, work in progress is located in my place or work in place is located in their place. You remember, missile company, satellite was done in X company's platform. That's why we said over a period of time there. Second condition fulfilled. Asset has got no alternative use. You will always say, no, this satellite has no use, but some other country can come and ask you, because you have got a global customers. Now, either that this should be such a specialized that it is literally other than Indian cannot use it, which is generally not possible, because technology is not any country's property there. Probably government must have stopped you. If you don't give this satellite to us, you cannot give to anybody else, like RBI example. That's why it is over a period of time. So I'll move fast now. ABC enters into a contract to build an item of equipment. You pay 10% advance and 80% in installments of 10% over the period of the construction, with the balance 10% payable at the end of the construction period. So 10, 80, 10. Significant financing component. So you enter into a contract to build an item of equipment. How the payment is going to happen? Advance you will pay 10%. What you will show? Will you recognize revenue? No. It's a contract liability. Then 10, 10, 10, 10 every time they pay, and at the end they will pay 10. That means it's installment payment. Installments of 10% each over the period of construction, maybe every month 10%, 10% or something like that. Simply to confuse you. And one more 10%, they could have kept quiet here. They said every 10% finish. The payments are non-refundable unless the company fails to perform as per the contract. Further, if the customer terminates the contract, they can retain the payment. They will have no right to compensation from the customer. What type of contract it is? It is over a period of time. And can you recognize this advance if the contract is terminated? We have to go there first one of the two conditions. First, initially we learned. So criteria 1 not fulfilled, second criteria also not met, but the third condition, oh wait. Now evaluate the contract is fulfilled. Yeah, I'm sorry, I also went into the thing. So the third thing, what you can do, suppose if the contract is terminated, I didn't read it fully properly. Further, if the customer terminates the contract, followed, no? The entity is entitled to retain the payments made till date, not your work completed till date. Understood the difference? And can you get anything extra? And they will have no further right to compensation. I might have completed 60% of the work, but as per installment logic, you might have paid only 30%. I have done very fast. You paid me only 3 installments. Now customer says don't want. Now can I get the payment for 60% with the profit? No, as per contract. No. What I can do, whatever you received, retain. Then you see what to do with this asset, whatever you have created. So you may have alternative use, you may not have alternative use, but and condition didn't fulfill here. So first of all, first condition didn't fulfill, no. Second condition didn't fulfill. When I go to the third, and right to seek payment is lost, I may not have any alternative use. Okay, this is fulfilled. Question is very silent here, but I cannot get. Customer has got a right and does not have a right to divert it to any alternative use, because there is a contractual restriction to not to use it for any purpose. And in the termination event, I can get compensation only up to the payments whatever I have received. So since this condition fulfilled, but this condition did not fulfill, the entire criteria 3 did not fulfill. Perfect. Entire for the work done with the profit. That means suppose 60% of the work is done. You should get a right to claim that 60% of the work with the profit. And if by chance if they twist the question and they say the contract says that in the termination event, they will compensate you only cost incurred up to date. 30% EMI they paid, plus that 30% cost only they will pay, not the profit margin. Then also you say that the third condition didn't fulfill, because seeking the payment means with profit. That should be the contract. That's why somebody drafting the contract should have been careful. You see, so many pages will be there, which we don't want to scroll through also. And say, accepted condition. And without this, they will not permit me to go further. And I say, okay, accepted. Do we know what exactly written there? See, they have protected themselves from all the angles. That means other party who is not reading it has not understood the terms of the condition. But he has agreed means fine, he has to be obliged. Okay, so are you clear, students? So this is not over a period of time. Now what is a measurement? Okay, so there are only 3 questions. Out of 3 questions, 1 is at a point in time and 2 are over a period of time. Now, but I hope you have understood very clearly. Now measurement of the performance period over a period of time. An entity is the owner and manager of the health club, enters into a contract with the customer for 1 year access to any health clubs. Measurement means input method, output method. And this is applicable only for over a period of time, not for at a point in time. Now when you have operating health club, it is over a period of time or at a point in time? What is the which condition fulfilled? When you have got health club means what? Say gym. When somebody is operating gym and you got a 1 year membership, is it over a period or at a point in time? You say, sir, 1 year means over a period. No. Out of 3, which fulfilled? Yes, which benefit you receive? You have kept the gym open. That itself is the benefit you have given to them. And the moment gym is open, you have consumed that benefit. It doesn't matter whether you go and do the exercise there. Question is whether the gym was open. Open, no, that means that's what I offered to you. You come. If I close the gym, that means I have not fulfilled my performance obligation. Now the customer has got unlimited use of the health club and they promise to pay 100 rupees per month. The entity, it's called CU. It is a currency unit or something, currency unit 100, a global language. Entity's promise to the customer is to provide a service, making the health club available for the customer to use as and when he wishes. That means it is over a period of time. Why? The first condition is fulfilled. Evaluate if the contract will qualify as a performance over a period of time. Is a how to measure now. Chalo, one thing over a period, which condition is fulfilled? We'll say the first condition itself is fulfilled. Then we need not test second condition and third condition. Did the control of the asset got transferred? Not required, because that is meant for somebody else there, a contractor. And the third one, that alternative use and all, that is created for a customized cases. And this comes for a general case. Now tell me, student, how to measure? What is the input? Time. Because time is one thing which will fall both the places. So you can say that measurement, it will define, if once the pattern of satisfying the performance obligation is defined, you should define how the progress should be measured. Since the services are uniformly provided, you can recognize it on a SLM basis. That means 100 rupees is given per month, you can recognize 100 rupees per month. But if the payment goes with certain, there are special equipments, pay as you use. You develop an output method. If it is used, you pay. That means billing is going to happen based on usage. It's a single performance obligation over a period of time, but you are going to use an output method. If it is used, you are going to pay for that. Understood? How to measure now? That will be I can treat it as a variable consideration also. I have to estimate now how much you will be going to use as per the contract. Followed, no? Then I have to apply a probability. Then there is a cumulative catch-up adjustment may come. Yes. So before we proceed to the next theoretical question, okay, this is also a performance obligation. This is over a period of time for intellectual property, right? See, we have to understand certain theory for input method. There is one special adjustment for input method. What is that adjustment for input method? See, if you use output method, no headache, and one practical experience is also given. But if you use input method, you may face one challenge. See, one thing I told you, survey. That survey challenge will be addressed by work in progress. Also, practical experience is also there. What is the challenge in the input? If entities' efforts are expended evenly throughout the year, then you can use a revenue on a straight line basis. Very simple, very straightforward, like GST monthly returns. How much effort you will put? Is it substantially different at one point of time? Your GST returns are same. Or cleaning of this room, how much effort? Say one particular fixed amount of efforts every month. Is it that sometime you put 10-hour effort, sometime you put 1-hour effort? So if your inputs, like your effort is your input, if you are going to spend it evenly, you recognize it on a straight line basis, like the previous one. You don't have any effort there. What is your effort? Just open the door and allow them to use the facilities. So you use an input method, but follow the straight line basis. Entity shall adjust the event, but however, when you put certain efforts and that efforts do not have a direct relationship with the transfer of the control, then you have to make certain adjustments. You cannot recognize revenue based on your efforts what you have put, because it will give you a weird output. For example, you have to exclude the cost that do not contribute to the entity's progress in satisfying PO. For example, inefficiencies, abnormal wastage happen. See, when you spend something abnormally, your cost will increase. Can you inventorize that as per Ind AS 2? Inventorize. Abnormal loss, can you load on the inventory? No, this you have learnt in your childhood only, inter-level. You cannot load it on the, that means it's an inefficiency. So the moment you load it on the inventory, it will hit to P&L account. Similarly, when you follow say percentage of completion method, cost to cost percentage of completion method, one abnormal cost you incurred. Because of that abnormal cost, your percentage of completion is going to shoot up. and you end up recognizing more revenue there. That standard says, no, please exclude that abnormal cost. You hit it to the P&L account, because during that year also, no, you will not make any loss only in the P&L account. Why? Because of that abnormal cost, your percentage completion increased, and the more percentage increased, more recognition of the revenue happen, and the more revenue will eat this abnormal loss. How people will come to know that you have incurred this abnormal loss or inefficient thing? Should it not bring it to the notice of the people by showing a loss in the P&L account? So if you make any, that's why that question, that columnar 5-year question, no, they may twist it. How? 1 year, one abnormal loss was incurred, 25,000 rupees. What adjustment you will do? You understood? I will take back you to that question where that 5-year contract was there. First year estimation 5.26%, second year 28%. Then you did cost to cost method, no? Estimated actual cost divided by estimated cost. What if 1 year 25,000 rupees abnormal cost was incurred? Ignore. That you don't include for your percentage of completion method. Are you clear about this? Okay, I'll explain you with the example here. See, you remember, if I remember the number, it was 9,50,000 is the total estimated cost. First year, 50,000 is the actual cost incurred. Then you calculated the percentage of completion, which is 50 divided by 9.50. And you said 5.26% completed. What was your total consideration? 10 fixed plus 1 variable. 11 lakhs into 5.26 you did, and you recognized some 50,000 something odd revenue. How much revenue it was recognized? 11 lakh into 5.26 percentage, 57. Okay, so if I had have drafted P&L account, P&L account would have come like this: revenue 57,860, cost 50,000. What is my P&L? 7,860. Everybody is happy. Did you incur any abnormal cost? God knows, no? By looking at P&L, who knows? But you have made blunder that year. The blunder is, out of 50, 30 is genuine, but 20 was a waste. Simply a waste. Now you hide it in your P&L. So now what you do now, since 20 is a waste and the standard says, look, exclude the cost that do not contribute if you use input method. You are using input method now. Are you not using input method? So they say that exclude it. So now what you need to do, when you calculate percentage of completion method, what is your percentage of completion? It is 30 by 950. How much? 3.15%. And how much is the revenue you need to recognize? 34,730. 11 lakh into 3.15%. Agreed? Now see how beautifully P&L will look like. If you prepare P&L account, revenue you say 34,736, cost you say 50,000, and you say loss 15,264. This is the difference between, if this adjustment was not there, you would have ended up showing profit during the year. And imagine if in the bracket I will write rupees in crore, how much impact it will make. And the same numbers, one calculation I will hide there, abnormal cost. See, now by looking at this, people will ask, what is this Baba 15,286? I have to explain now in the AGM, or whoever, the investor, the venture capitalist, or whoever are there now who have given the money and catching the neck of the management. I have to explain to them now by looking at this. I say, sir, that day when this thing happened, then one drum fell down and all the oil wasted. What type of internal control? Who is that internal auditor? Bring him in front of me. The internal auditor also will come and stand. Now he will tell, sir, that HOD has to, I have already communicated to the HOD. All that HOD also will come. And if he say, I missed it, he say, get lost. You are not required from tomorrow. Which was hiding. Understood now? Okay. Now the second conditions they say, recognize the revenue to the extent of cost incurred only. When cost incurred is not in proportionate to the entity's progress in satisfying the performance obligation. What is this? Understood? They say that, see, first thing is you have to exclude the cost when there are abnormal things. I explained you how it works. Nobody's there. Okay. Then see, recognize the cost to the extent when the cost is not in a proportion. That means there is no abnormal thing here. It's a very genuine case. But the problem happened, you incurred the cost which is not proportionate to the work what is done, but no abnormal. Then the standard says you recognize the cost revenue to the extent of the whatever actual cost you incur. Still didn't understand. However, such revenue recognition, that means you can recognize the revenue to the extent of the cost only if all the below four conditions are met. 1. The goods are not distinct performance obligation. Second, customer is expected to obtain the control of the goods before receiving the service. That means your service is not even complete, but he got the, and this is applicable only for the goods, not G bar S. If you observe, is only meant for goods, not for service. And customer has got the control. The cost of such goods is significant relative to the total expected cost, and the entity procures the goods from third party and does not significantly involve in designing or manufacturing of the goods. An entity shall apply appropriate method consistently, and any change in the methods will be covered by Ind AS 2. That means whatever input method or output method, whatever you do, you have to follow consistently. And the day you wanted to shift from input to output, you have to apply Ind AS 8, prospective application, not retrospective, because it will change in the estimate. Okay, I hope you have understood this. 4 conditions? No. That's why if you have to understand this, no, we will solve one problem. Otherwise, same problem I can explain you as a theory. You understand one problem. In that problem, I will explain you the application of this. And that question came 2 times in the examination. Same question repeated 2 times. But if somebody has to solve this question, they have to reach up to here. That means for them conceptually, what is performance obligation, what is over a period of time, what is transaction price, what is the measure of progress, they should be very clear. So now you are ready. I will take you to one question now. Examination. At 25%, 35%. That you what you wanted? At one place you cannot use both the methods. At a time you can either output or input method. No? If there is a performance obligation which is recognized over a period of time, performed over a period of time, you can either use output or input. At a same time you cannot use both. No, this particular thing I think you are talking. In that question, in that examination question, they specifically said that, see, we solved one question with this 5 years, 9,50,50. Which method we used? Input method, because they said very specifically cost to cost input method. In the examination question, they said survey method was used. That survey method is an output method, not an input method. Because survey means what? You have done some work, you call one surveyor, surveyor will give you an estimation that, okay, 30% of the work is complete. So if you call surveyor, then will you do input method? You may shift to the output method. But here you will face the problem. Because when the survey happens, surveyor may say 25% work is complete. But as per your cost to cost method, 35% work may be complete. So you cannot recognize revenue at a 35% because you have opted for output method. Because at the same time, both you cannot follow. If you want to shift from output to input, you can do it. It becomes Ind AS 8, changes in accounting estimates. Let it be, we'll see. Followed, no? Are you clear? If that survey method is chosen, exactly, if there is a survey method is used, there will be difference between actual cost and as per survey how much is your cost. That difference becomes your work in progress. It was asked in 2019 or 20, this question was asked. So after I finished my Ind AS, this full complete, no, I told you I'll give you certain extra questions. They are second priority because repetition of that is a very low chance. Out of your academic interest, see, first you give priority to get hold over what I am discussing here. Irrespective of, you cannot take any chance whatever we discussed in the class. Afterwards you find time, you please explore more. There work in progress concepts comes. Anyhow, see, I always believe and I always tell, institute don't want to give you 0. Institute don't want to give you full. In that question also, there were 2 breakup there. So you would have failed in one, but other thing would have been okay. Followed, no? Because if one was a new concept, but other thing was there, so that you come somewhere at the middle. Yeah, see, your question, if there is a change in the due to abnormal cost, is your estimated total cost is going to change? Yes, your estimated total cost also going to change now. Okay, but that type of things will happen in our real life. If you observe this question, they gave you an assumption. Assume for simplicity's sake, estimated cost remain the same, which will not happen in real life. There will be a change. That's why generally when we follow YTM method, all sort of permutation combination of estimation change will sit here. That's the simplest method. No need to headache of give the cumulative catch up with the change in estimations here, change in breakup here. That's not required. Followed, no? Okay. So, yeah, let us come back to this. I'll give one example. So, before I proceed, I would like to tell, I always tell, no, enjoy your studies, enjoy your studies. I told this to someone. They asked me, that person asked me one more beautiful question, how to enjoy the study. Very beautiful, superb question. I loved it. Yeah, I wanted to tell something. Then I suddenly realized, yeah, Baba, that's very true. We'll tell, please enjoy the study, but how to enjoy the study? Yeah, I'm trying to figure out. Somewhere I'm starting now. Because that's what I need to see. That's why I encourage the question, because if you ask me a question, no, it makes me to work now. I will definitely work to figure out how to enjoy. But one thing I will tell you, one basic thing to enjoy, no, you have to be curious. Now again you will ask me one more question. How to become curious? No, we all are curious. We are born curious. Only you killed that curious in this process. Everybody, you look at the kid, no? How many questions? I will tell you one example at this point of time. Please permit me to move somewhere else. About my daughter, I don't know whether I told or not. Huh? No, not that. One example. See, she asked me so many questions. Why this? Why that? Why it is like this? Okay. One day, she asked me, there was one sign like this. See, curiosity begins with knowledge. Till she goes kindergarten and learnt ABCD, she will not ask me a question on this. You know what is this? No parking signboard. Till she go to school, she will not ask me what it is. But when she went to the school and started learning ABCD, and she saw there P is written and it is striked off. She asked me why that P is striked off. See, a very innocent, curious question. Because she has written P in the school, but she doesn't know why somebody else. Then I told Baba, nobody should park the vehicle here in that particular place. Now, we went to one Mysore tour last year. She was sitting next to the window. Suddenly she called me. She's five-year-old at that time. She called me and told, Papa, see, some vehicles have been parked here. Parking should not have been done. No, see, they have put here P. Beautiful students. I love that moment. No? You know the moment. This I learned when I was at the age of 18 to apply for LLR. I learned at that time because I never asked this question to anyone. My daughter learned this at the age of 5 that in that P area you should not park just by asking one question. And why did she ask? Because she was curious. Why? Is it going to give her 1 mark? No, that's what she is. That's what we are, we were. If we look more deeply into ourselves. Because we want to, that's what we enjoy by when we know. That comes to us automatically from within. That's why students, right from the beginning I'm telling, please ask. Forget asking me. You ask yourself when you are reading. Then you see, you start loving this subject. Maybe I have to explore more. Why, how to make it more loving. But somewhere Albert Einstein also telling that he is not a super intelligent person, but he is super curious person. We really want to know what it is. That gave him everything. Okay, so don't kill your curiosity. Let us move to one question so to explain this concept of what this means. So take out question number 13. With this, I'll give you that example. I'll explain that. On 1st of January 2011, entity contracts to renovate a building, including the installation of the elevators. Oh, this contract means there is one building. Okay, already, did you construct? No, old building was there. You are a contractor. Your contract is to renovate it, and this time it must be a 3-story building, and you want to install one lift also. So, in one contract, what is your performance obligation? Renovation. How many distinct goods are there? 2. What are those? Lift and renovation service, or maybe cement, this, that, all. At a product level, there are 2 distinct. Why? Because you can renovate, somebody else can install the lift, or somebody else can renovate, you can go and install the lift. Now, at the contract level, how many performance obligations are there? 1. Why? Because you asked a renovated building at a contract level. So, there is a single performance obligation. The entity estimates the following, that the total transaction price is 50 lakhs, not fixed or variable? Fixed, not 1 rupee more, 1 rupee less. Is there a variable consideration? No. Finance comp, so forget that. Step number 3, you got this. Step number 2, you decided one PO. Step number 1, you entered into a contract. Allocation is required? No. Why? One performance obligation. Let me go to the step number 5. Is it over a period of time or at a point in time? Why? Huh? Did you consume the benefit? Did you get the control over the work in progress? Yes. As and when I do the renovation work, who is getting the control? The client is getting the control. Customer is getting. So that is over a period of time. The moment over a period of time, you have to measure. You can recognize revenue over a period. So you will use input or output method. So generally which method? Except that examination question, input. Almost all questions are input method. So that's why they will give you cost now. So they said that the expected cost of the project is 40. So this difference is your profit. Out of that, elevator cost itself comes 15 lakhs, one big chunk, and 25 lakhs is your renovation cost. Are you a manufacturer of elevator? Now, how do you get the elevator? You must be getting that elevator and installing it. Do you have any profit margin there? Arey Baba, if you load your profit margin, no, what customer will say? He will say, I will give you, you come and install it. He is not a fool, no, when he is negotiating. So literally there is no profit margin on this. I have to just get it from third party, install it as per the contract. Agreed? Now the entity purchases the elevator and they are delivered site 6 months before they are installed. Why? Arey Baba, my renovation is complete. Lift is not a kids thing, toy, like you go to the market and like a milk, no, you buy one lift. You may have to place certain order there. Okay? And it will take time to manufacture that lift as per your specification. So 6 months advance only you are ordered, And 6 months before only, your renovation is 6 months yet to complete now. And lift came and got delivered there. Your work is not complete. Can you go and install? No. But you have incurred a cost for the lift. And lift is one of the component of your performance obligation. Now you got a... Wait. Let us come to that. Yeah, it's in progress, you tell. But can you got a lift and you say, sir, my 50% work is complete. Can you travel in the lift? Lift is sitting there idly. No. What is the progress? Okay, you demolished something, you constructed one wall, that is a progress. You brought one lift as it is from third party and kept it there. And you say the work is 50% complete. Where is 50% complete, Baba? On that lift, are you supposed to do any customization? Then you can include this part of that. You are not doing any customization. There is no profit margin to you. It is just needs to be installed as part of your total work. Then you cannot sell. No, tell that you cannot include this lift in your performance. Telling my performance is so much complete. Now, the entity uses input method on the cost to measure the progress towards completion. Have you incurred any abnormal cost? No. 15 is the normal cost only, but that cost may not be, because if this was delivered just 1 month before, where your 90% of the work was complete, it was ready, like lift came, your work is complete, go and put it here. Then you don't have this problem. Your problem came 6 months back, 31st March came. 6 months back, 31st March came. At that time, you spent on lift, on which you don't have any profit margin. And if you use cost to cost input method, you know what is going to happen? Your percentage of completion is going to increase. That's why I will intentionally do something like this. What I will do, if I am a contractor, my revenue is low. So on 30th March, I will order right now, which is not required for my work. Because of this, my percentage of completion is going to shoot up and I end up recognizing more revenues. No, I should recognize revenue. I cannot leave this from revenue recognition. The standard says that if this type of, it is a normal cost only, but if you incur prior, then you recognize revenue to the extent of cost incurred. No, again, that we need not. If it is the borrowing cost, then it will get capitalized, no? No, that's fine. That is a different story. Again, that is what you should think in your real life. Okay, where borrowing cost I have incurred, what I should do. Here, you see, this is a very small specific question. Just tell me, is this 15 lakh, should I include in my percentage of completion? If you permit me, definitely this type of things only I will do now. I will, wherever I need not incur, no, I will just buy in advance and I will not pay him also. I will pay him 6 months later only. Correct, Baba, but I have incurred right now on which I need not do anything. So, what happened now on these items, which is on which I am not doing anything, I will start recognizing percentage of profit on this. By including this 15 lakh in my total cost of completion, my percentage of completion is going to increase and that much more revenue I will recognize. But you included something in the cost on which you literally don't have any profit margin, no. That's why standard says on such item, recognize revenue to the extent of cost incurred. That's it. We will solve that. You recognize revenue only 15 lakhs here. You give a breakup here in whatever cost you incurred. Percentage of completion you apply only for the other cost. For this elevator, don't apply percentage of completion. 15 lakh you incurred, no? You treat 15 lakh revenue. 15, 100%, 100%. But don't use this 15 lakh for your percentage of completion. Minus elevator cost balance, you check percentage of completion, you use normal method. But this one item, since you didn't spend, that is the 4 condition we have to check now. You recognize revenue to the extent of cost incurred. If you have made the note, read that. It says recognize revenue to the extent of cost incurred, provided 4 conditions are fulfilled. We'll apply that. Now, how much you completed incurred actual other cost? Only 5 lakh. You see, no? That means you just started renovation in the month of 10th of March. 5 lakh you incurred. Suddenly you ordered lift which was required 6 months from now. So you say my cost of production is 20 lakhs, but 20 lakhs work didn't happen now. You increase your percentage of completion more now. You see the master plan, no? What people will do if you permit percentage of completion. That's why they got this. And how will company recognize revenue if the performance is over a period of time? Yes, we will solve this problem. We'll check whether those 4 conditions will fulfill or not. So write, in the given case, and I will show you other variations. They will talk about principal agent relationship and all in the examination question. I'll show you how it comes in the examination. In the given case, entity incurred significant cost. Did it incur significant cost? 15 lakhs, which do not depict direct relationship. If you are a manufacturer of lift also and renovator also, yeah, then this exception do not apply to you, because you would have loaded a profit margin on that lift also. You got it from third party, no? Relationship between input and transfer of control. Because of this lift, no, there is no relationship. Thus, recognize revenue, how much? To the extent of cost incurred. Means don't apply percentage of completion method, recognize only to the extent of cost incurred if all 4 conditions are met. All the below 4 conditions are met. One, whatever cost you incurred, is it a distinct performance obligation? No, you had only one performance obligation. No? It was one performance. So elevator are not distinct performance obligation. Yeah, if your PO had 2 performance obligations, to deliver the lift and to renovate, and 2 are different. And why it is not different? Integration at the contract level. What customer asked was not lift and this. He asked you a renovated building. If it was different, yes, you deliver lift, recognize revenue on lift with your profit margin. Second, so first condition is fulfilled. Yes, cost is substantial. Is that elevator cost is substantial? Yes, 15 lakh compared to 40. How much it comes to? 15 divided by 40. That means 37.5% of your total estimated cost is made up by one item. About substantial judgment. So this is also fulfilled. What is the third condition? Upon delivery, who took the control? Customer took the control. Why? Because where did you deliver? Where the question says? In the client's location. If this lift hand I have kept it with me in my location, I cannot take this exemption. This exception not applicable. No, I should not show that cost only. Here at least I can recognize revenue to the extent of cost. If I bring this and keep this lift in my location, I could have used it for any other client. No. That's why in this contract I should never bring the lift into picture. Understand? So my revenue will be very minimal, only than that 5 lakh rupees. And the fourth condition, no modification is done. That did you do any modification? Then you could have loaded profit on that lift also. So include full 15 lakhs. But it is like purchased and installed. So all the 4 conditions are fulfilled. Correct? So understood how to write an answer after the exam answer. Thus, progress to be measured based on percentage of cost to total cost excluding elevator cost. When you calculate percentage of completion, exclude this elevator, revenue to be recognized to the extent of elevator cost. That means how much cost you incur, that much only you recognize. Don't use percentage on this. Perfect students, understood very clearly what this example is meant for. What all the four conditions? Yeah, we'll see. General entry is contract asset account debit to revenue, but that amount comes from certain calculations. What is that calculation? We'll calculate. So write calculation of revenue recognition. How much revenue I should calculate now? If this condition was not there, you would have said how much? 20. Say, don't do it. Don't do it. If this condition was not there, you would have said 20 divided by 40. 50% work is complete. How 20? 15 lift plus 5 what you incurred compared to total 50. 50% work is completed into 50 lakhs. 25 lakhs you would have recognized as a revenue. And minus 20 lakhs cost, 5 lakhs is your profit. This is what you would have done. Now, how do we recognize calculate the profit? Right, calculation of profit. Revenue for renovation work. How much is your renovation is complete? %. How did you get? Okay, first of all, how much is allocated out of 35 lakh, 50 lakhs purchase consideration? 50 lakhs is the total transaction price, no? How much is allocated to the renovation work? 35. 15 is lift? No. On lift, no profit, no loss. So out of 50, 35 lakhs is allocated to the renovation work because we are recognizing revenue for renovation. We will split now because this is one cost which is not having a direct relationship. Out of previously I would have done percentage completion into 50, no? This time I will not do it because four conditions fulfilled. How much is renovation related revenue? Okay, first of all, if these conditions were not there, what is your transaction price? 50 lakhs. You would have done into percentage of completion. But now you have to break into two pieces. One, renovation work related revenue, elevator related revenue. If you have to break, total consideration what the customer pays is 50 lakhs. How much you will allocate to elevator? 15. Why? Because on 15 you don't have any profit margin. So if you allocate 15 to the elevator, how much you will allocate to the other 35 lakhs? Into how much cost did you incur? 5 lakh. What is your estimated total cost? 40 including lift, no? 25 lakhs. Which gives you percentage of completion. This gives you 7 lakhs. And revenue to the extent of cost. One is revenue for the renovation based on the percentage of completion. Because 4 conditions fulfill, you recognize revenue to the extent of cost. How much? 15 lakhs. On this will not come again. So total revenue will be 22 lakhs instead of 25 lakhs. If you would have permitted me to add this 15 to the cost, I would have recognized 50% of 50 lakhs, which is 25 lakhs. And they stop me from doing it. And they say recognize only 22 lakhs. Minus, what is your costs? How much cost you incur till date? 20. 15 plus 5. And your profit is 2 lakhs. Have you understood this? Now it should be very perfect to you. This should be very clear to you. Why I am doing this? See, if they really wished, again I am telling you, they can simply complicate this. Estimations, variable consideration, significant financing component. 2 times examination, they didn't do it. They have twisted this. They may not have given you straightforward. Are you clear? And if this provision was not there, you would have multiplied 50 by 20 by 40. And you would have told 25 lakhs is your revenue minus 25 cost, and you would have recognized 5 lakh as a profit. That means you overstate your revenue by including certain items which has got no relationship to direct relationship. It has got indirect relationship. Why? Because you didn't manufacture it. You didn't do anything there. It is not a separate performance obligation. That means 4 conditions fulfill. 4 conditions don't fulfill, you go for normal. Perfect. I can move further. Dhanushri, you are very clear with whatever doubts you have, everyone? Yes. So, we'll just check the exam questions. See, this question came in May 19 examination. Orange. Okay, please pause the video. Do one thing. Theory and all not required to be written. Correct, no? Why? 5 marks. Which theory you will write? That 4 points you will write. Okay? And then how much revenue will be recognized as per the standard? That means you have maybe 1 mark for that last calculation. You calculated profit and 4 mark for that 4 points. This is my mark allocation. So points though we know now. You don't need. Do that last calculation and tell me how much is the revenue recognized with the profit. Yes, students. So we'll check the answer. In this question, was there any catch? It's a very plain question. This is a procedural question. Even numbers are also, I think, maybe doubled or God knows what they have done. Okay, but it's a very silently sitting in 3A. So first, as usual, you will write certain note there. There is no direct relationship. That's why we are going to use this exception, and those 4 conditions we are going to check. And conditions are fulfilled. Yes. So we are going to recognize to the extent of cost incurred. This is one conclusion. For me, it may take you 2 or 3 marks, or 3 to 4 marks. I don't know. Because how much weightage they are given for the calculation? They might have given half of mark for one point. Then it will come 2 mark plus 1 mark for the conclusion and 2 marks for the calculation. Whatever it is, if you want to secure full, you have to write it with the theory, with the proper conclusion. Then, see, what is your percentage of completion? 20%. How did you get? 48 by 240. This you could have done it here. The number of marks are very small here. You could have done it in the straight away question also. And you are going to exclude this elevator as it is. So, revenue renovation work comes to 67.2. Did you get this? 336 is the renovation related work into 20% work completed, and elevator cost to the extent of cost incurred 144, total 211, actual cost incurred is 144 plus 148, so 19.2 will be the profit for the year. 15, I think it's not 15, it is 144. I copied from, it's the same, no, I copied from the previous slide, copy paste. So wait 1 minute, since you want. Okay, now okay, happy? No, it's good that you pointed it out. So like this question was done. See, in test your knowledge also this question has come. See, maybe, I don't know, any one of the question may come to you, don't get confused in the exam. I'll explain you. It's the same story. A company X entered into an agreement on 1st January to renovation of the building with the 50 lakhs. Promised consideration cost is 40. Rupees 10 lakh for the air conditioner instead of 15, and it is instead of elevator, it is AC and 10 lakhs. Now, why this question is a bit different? They said X company determines that it acts as a principal in accordance with para B34 and B38 of Ind AS 115 because it obtains the control of the air conditioners before they are transferred to the customer. And the customer controls the control of the air conditioner when they are delivered to the hospital premises, and customer got the control. See, what is the implication of this? It says that you have acted in your capacity as a principal. That means your work was not like an agent, like go and tell the elevator company, go and do this. You would have earned a commission. See, there is a, later we are going to learn principal and agent relationship. Like suppose you have booked some hotel through OYO. Whom you made the payment? OYO. Or you booked one flight by making payment to Make My Trip. You paid the payment to Make My Trip. But is the Make My Trip, what entry Make My Trip should pass? Bank account debit, say 5,000 rupees. To what? To revenue they need to pass. No? Now question comes, will the Make My Trip say 5,000 is their revenue, or in that 5,000, 500 is their profit, or their revenue is 500? Wait, that depends upon in which capacity they are asking, they are acting. Are they a principal or agents? We cannot simply say that. They look like agent, but they may act like a principal. For this, there are certain conditions to be tested. I told you, story after story. If those conditions fulfill, we will treat them as a, because see, today it is not wish today. If they are given for their wish, what do you think? You are a principal or agent? Then depending upon the taxation implication, depending upon accounting profits, what I need to show to the investors and all, I would say, this time I say I want to be a principal. Next year I will say I am an agent. No, that option is gone. Today they have set certain rules, and we have to see as per these rules, what business practices are there. Your business practices and these rules, does it match? Yes, principal. No, you are an agent. Now this standard says that, look, as per those conditions, 3 or 4 conditions, yes, this person is a principal. That means when I say to revenue, say I may Make My Trip, and if I act as a principal, you know what is my accounting entry? Bank account debit to revenue 5,000. Zomato will, the moment you place an order with Zomato, Zomato will say bank account debit to revenue, the money what they receive, not the commission what they receive. So this sentence gives us a hint that he is a principal and is going to recognize the gross revenue. That means entire 10 lakh he will show as his revenue, not the commission portion on that 10 lakhs. How much difference it, and if at all, they twist this question and they say he has acted, he didn't obtain the control and he acted as an agent, this 10 lakh will never be part of your revenue. And all these things are not applicable only. That's what, no, percentage of completion is only on water renovation. And on this 10 lakh, if at all you make any profit, no, that will be shown as other income. Not your revenue from operations. Your operation is your contractor. And if you have earned some commission in that AC delivery, that you will earn separately. See how one sentence makes the difference in the calculations what you do. No, don't expect that they will do it, but I'm just telling you, you simply cannot ignore this sentence or overread this sentence. Understand the accounting implication of this sentence. They said that, look, can you do this 10 lakh? In the previous question, see, you recognized revenue to the extent of 144. Why? Because you were a principal here. You got a control. Who got the control from the, see, there is a client here. This is a client. This is you. This is the lift from manufacturer. Who supplied goods to whom? Actually, lift person gave here. But did you get the control and gave to the customer? That depends upon those conditions now. That for this we have to go through that principal and agent relationship. Now question is, between this lift manufacturer and your client, did you act as an agent or did you act as a principal for that lift? At this point of time, we cannot say, Baba. That's what I'm trying to tell you. For this, separate conditions are there. Inventory risk, price risk, all those things. We will see that later. If at all our conditions say that this guy is an agent, then I cannot recognize 144. In my P&L, I cannot show 144. I have to show only commission part. If I say I am a principal, that means I got a control and then I transferred to him. Then I am a principal, and if I am a principal, entire cost of the lift I will show as my income. And whatever I need to pay, in this case Zomato's or Make My Trip P&L will look like this. What is your revenue? If you are a principal, there can be two scenarios. if you are a principal, make my trip, my example, no? If make my trip is a principal, your P&L will come like this: revenue 5,000, COGS 4,500, P&L 500. If make my trip is an agent, your P&L will come like this: by commission 500, P&L 500. So we assumed that he is a principal. Question was very silent. No commission. So we assumed that we got a control and he transferred. If at all they twist this question, which is a very rare case, telling that this guy acted in his capacity as an agent, then don't recognize this 144 anywhere. You should recognize the profit on that 144, or you may not have any profit only. Not here, not as part of this contract. It's a separate performance. Are you clear? Understood the meaning of this sentence? See, it has got no implication to what you do now. It's the same cassette you are going to put now and play the same thing. Oh, there are 4 conditions, this, that, and all, and the calculation is so much. But understand the implication of one sentence there, which was missing there, and you assume that he is a principal. So, company X uses input method of the cost incurred as on 31st March, other cost excluding air conditioning is 6 lakh. Whether the company should include the, see, beautiful, whether you should include the cost of the air conditioning to measure the progress? Yes. Why? Because you are a principal. You will get the control and then you deliver. Like when Zomato, you place an order through Zomato. Who gets that control over the food item? If that one, we have to apply certain test. If Zomato proves that, look, I get the control and I can fix the price, then Zomato, whatever you pay to Zomato. Zomato will show in their P&L account as the full amount. And whatever they pay to the hotel, they will debit it to the P&L. If the Zomato proves it, that I am just acting like an agent, then difference between what you pay and what the hotel charge, that will they show as the income. So one of the aspect I explained you now only. So one aspect is finished. Followed, no? There's a principal agent. It's an exam. It has come in the exam. So they asked you, can you recognize? Yes. How should you recognize at the end of the 31st March? See, now the twist is, can you recognize? Yes. Why? Because you are a principal. But how much revenue? That goes with that 4 conditions. Followed? Again, pause the video, student. Just get that number. Last work. When delivered, exactly. That's one of the conditions, no? Out of 4 conditions, one of the conditions is customer should have got the control over the delivery. After taking delivery control, we have given it to the customer, that to 6 months before. So how many assumptions are there? See. Yes, so please pause the video, work out and tell me. This is the last question. Then we'll move on to the next concept. Yes, students. So before we see in the examination, first thing I will tell you, if this question comes, don't jump. Look at the marks. If this question comes only for 5 marks, just write this theory. If it comes for more marks, then you have to write the theory of the principle also. Which in the suggestion answer they are not given, but in exam they may twist, no. They may expect you to tell that principal should recognize the gross revenue, or they may say that something related to the principal they may give. They may twist the question, is it a principal? Is he a principal? That they may ask you. Okay. So now same story, that you have incurred a significant cost which has got no direct relationship. So you have to check whether 4 conditions are fulfilled. Yes, all the 4 conditions are fulfilled. Because of this, you will recognize to the extent of cost incurred and that additional AC cost to whatever cost you incurred up to AC cost. So 20% is complete because 6 lakh by 30 lakhs. So you renovation work, you allocate the out of 50 lakhs, 40 lakhs you allocate to renovation work and 20% is complete, which is 8 lakhs. Since the exception applies, any difference? What happened? What you put? 50 lakhs is the total consideration, no? Out of that, how much you give for renovation? 40. And balance 10 is for AC, which you recognize as it is. Why? Because 4 conditions fulfilled. What mistake you made here? How did you get 15? How much you incurred? 6 lakhs. Out of 40, no, Baba. Out of 40, you have to leave this 10, no. That was the crux of all discussion. Otherwise, you help that client. Your profit would be definitely more than 2. Obviously, that's what the effect somebody wants to achieve. So, COX will be 16, so 2 lakh is the profit. See, students, if this provision was not there, okay, maybe, did you get 4 lakh profit? How much profit you got? Okay, I don't know. See, this, if this provision was not there, without this condition, you would have told 40% work is complete, and you would have profit on entire 50 you would have applied, and you would have recognized 4 lakh more profit during the year, and your EPS would have got increased, your market prices would have got increased, investors are very happy, CEO would have got a fantastic bonus for the year, and this year is done, next year you will resign and go. And this impact will come as a YTM level next year. Next year you have done really well performance, but the last year's cumulative one headache, no, that will get adjusted this year. And this year CEO is worried. Why? Because last year CEO did this and did went and tata bye bye, no. Including AC. Be careful, you have to see this. So this question has come 2 times in your exam.